Continuing the OPEC versus Shale conflict, who's going to win, Ed?
Well, in the end, the markets are going to win, and it's going to be Shale. The OPEC position, even with Russia, is really not sustainable over a long period of time. They're losing revenue by doing what they've done. Yes, they may be having a little bit higher revenue than they otherwise might have, but you get the prices up, you get the U.S. producers hedging through 2017 now, pretty much into 2018, and they can survive at a lower price. So they're going to win.
I was talking to some bankers, though, yesterday, and they said that the huge shift of money into the Permian is over, that it's going to go to other areas, that we're going to see more of a value play. We saw the mix of what's in the wells change in the last earnings season. We saw some production estimates come down a little bit. I mean, is the Permian that we expected 6 months ago still the Permian we're going to expect?
Absolutely. So the bigger picture is that there's a lot more oil there than people had thought. There's a lot more years of oil there than people had thought. And what we've seen is a hiccup. So you hear the GOR number, which was alarming for a couple of companies in the Permian. That's the gas-oil ratio, a little bit more gas than people had thought about. But gas is going to be valuable. It's going to be put into pipelines to export to Mexico or other parts of the U.S. and feeding into LNG. It's a temporary problem. The other little problem was really a hiccup in terms of utilization of the service sector. So, yeah, we think that the Permian is going to grow at a hefty rate this year and probably the same rate next year.
And then the question becomes hedging, because you mentioned it before. The higher oil prices go, the more hedging comes into the market. I want to get your take on just how much. Take a look at the Bloomberg here. You have the oil prices, the white line, and then you have, the oil price is the yellow line, and net commercial positions is that white line. So the idea is when oil prices rise, you see short positions coming in, which basically means you're shorting more and you're hedging. How much is really going on right now?
So the better curve to look at is WTI against Brent.
He's correcting my chart.
And I'll tell you why that chart is misleading if you'd like.
Yes, the guest is always right.
But if you look at where they are, it's the same kind of crude essentially. They should be in parallel. And there's a breakaway now in the last 3 weeks where WTI widens as you go out in time. And it's actually pretty much flat at $50 a barrel through the middle of 2019. That's a sign that producers have been hedging in Q3. They're locking in a price that they're comfortable with. The best producers in the Permian have positive cash flow at under $40 a barrel. So, yeah, not all shale is the same, but the Permian is quite different.